Good morning, everyone. I'm David Paul. I'm the Managing Director of VectorVest here in the UK and in South Africa. And today I'm going to try and answer the questions. The stock market reached a bottom. It's just after the open. Well, in London, the London market up nicely. I think you can see me, but that's me. I've been trading in the stock market of the world since way back in 1982, and for the last 10 years I've been helping people improve their performance with the VectorVest product here and in South Africa. We're looking at in this chart the VectorVest composite of all of the shares that we follow on the London stock market. It's an equally weighted index, and those red and green triangles that you can just about see mark the longest term measure of the trend on VectorVest. And as you can see, as we go into the trading day, the long-term trend is still down. That hasn't turned. And the long-term trend has been down since pretty much the start of this move way back in February. As we go into the trading day, the short-term trend of the London market, or at VectorVest we call it the primary wave, is up. That turned up yesterday for the first time in a long time, but the longer-term trend still remains down. If you were a conservative investor, then we recommend you sit and wait. If you're following our worry-free trading plan that I've talked about on Core Finance many times, you would be waiting. However, the primary wave is up, and that means that aggressive investors, swing traders, spread bettors have got permission to in fact start to stick their toes into the market. I haven't done anything myself yet, but I'll be looking to actually stick my toes into this market today. In the US, a pretty similar story. The VectorVest composite of the USA, the longer term trend is down, and although we had a big day yesterday, the short-term trend in the US market is still down. So in the UK, we are in an up-down situation. Short-term trend is up, the long-term trend is still down. In the US, we're still in a down situation. So even the most aggressive traders, if they're following the rules, should sit on their hands. Now, in both markets, our metrics which look at the momentum of the trend and look at the momentum of the breadth of the market as defined by the proprietary VectorVest buy-sell ratio, which is a green line on the chart you're looking at. Both these metrics are in a mega oversold situation, and I don't think I've seen them as oversold ever in the last 10 years. So a signal that we actually get, which is preceded by a mega oversold situation, is invariably a very good signal. So I'm looking forward to a strong momentum move over the next couple of weeks. I still feel it's a bear market rally, but that bear market rally in vastly oversold stocks could in fact produce a performance which is equal to my target for the year. So which stocks to look at? Well, Avon Rubber is our top stock by VST. And that's a 5-year chart. You can see the price performance. It's pulled back to an old top. In the window below the price, I've got forecast earnings per share. And that forecast earnings per share running up very nicely indeed. And that's the engine that's driving the share price. I think it's just a matter of time until Avon Rubber takes out those old highs. It had a great day yesterday. I think it's a very exciting time. This is Lion Trust Asset Management, and I think you can see the outstanding earnings per share growth. The shares pull back to a long-term trend line that I've drawn. It's pulled back to an old top, and it found strong support there, bounced very strongly yesterday. And that support is also a major Fibonacci level, a 78% retracement. I haven't put it onto the chart. I'll put it on the next chart because it's done the same. That's Games Workshop. Games Workshop, again, you can see the very strong earnings per share growth. It's pulled back to that long-term trend line. It's pulled back to an old top, and I've drawn in this case the 78% retracement. So that's 3 very strong methods of predicting support, all coming in at pretty much the same place. That looks like a really good level in Games Workshop. I would expect the share to move up strongly if in fact this turn up in the overall market is sustained and it's not a one-day wonder. The GB Group also pulled back to that long-term trend line, pulled back to a 78% retracement. Had a great day yesterday. Earnings per share looking superb, and that looks like a low-risk, high-probability opportunity to take advantage of this bear market rally. I'm looking upon this run-up as a bear market rally until it proves itself to the contrary. Diploma also pulled back to that long-term trend line, 78% retracement, and a beautiful, strong and linear EPS move over the last 5 years. So folks, a very good day yesterday. You've all read the news, re the stimulus in the US, which was well received. Until the market proves itself to the contrary, I'm assuming that this is a bear market rally. However, in very deeply oversold stocks, this could be an exceptionally good move and make our 2020 target, at least my 2020 target. It is my advice that in both countries that you search out companies with outstanding balance sheets, companies that have got the financial clout to get through this, and of course companies that in fact can actually acquire companies that haven't got the financial clout to get through this. So on VectorVest, our relative safety metric, with one click, we'll find shares with outstanding balance sheets, shares that can get through this trouble and profit from this trouble handsomely by buying up competitors at knockdown prices in a few months' time. Thanks very much indeed.